What's up, traders, and welcome back to Explain the Charts. Today is October 2nd, 2025, and we are doing a deep dive into Litecoin or LTCUSD. There is a tremendous amount of buzz surrounding Litecoin right now, with analysts coining this month Cointober and warning of a potentially wild ride ahead. The main reason for this is the looming deadlines for several spot crypto ETFs, including one for Litecoin, with the SEC expected to make key decisions soon. This anticipation has injected significant volatility and trading volume back into the market after a relatively quiet September. We've seen reports of a massive 120% surge in daily trading volume, which signals that big players are making their moves. Fundamentally, the bullish case for Litecoin has been building for a while. We saw Canary Capital file an S1 for the first spot Litecoin ETF way back in October of last year, which really kickstarted this institutional narrative. Furthermore, news broke in July of this year about a massive $100 million commitment to integrate a dedicated Litecoin treasury into a publicly traded company, MEI Pharma. This level of institutional adoption and integration is a powerful long-term bullish signal. Some analysts are even floating a potential price target of $160 by March 2026, citing a classic bullish reversal pattern that they believe is nearing a breakout. However, it's not all clear skies, as other headlines have pointed out that Litecoin's price is forming a risky pattern as the deadline nears. Right now, news from various sources places critical support around the $106 level, which bulls are reportedly defending, with a potential rebound target of $108. With all this conflicting news and high-stakes speculation, the only way to get a clear picture is to dive into the charts. So, let's pull up the daily chart for LTCUSD and see what the price action is telling us. Looking at the full daily chart, we can see the story of the past year unfold. There was a powerful rally in late 2024, culminating in a peak just shy of $150 in early December. Following that, we saw a sharp correction and a period of high volatility through January and February of this year, where price tested highs above $140 again before a major drop. The price found a significant bottom in early March around the $83 mark. From that March low, Litecoin began a slow and steady recovery, building a solid base of support throughout the summer. You can clearly see a prolonged consolidation phase from roughly May through September, where LTC traded in a wide range between about $80 on the low end and bounced off resistance near $120. This multi-month consolidation is significant because breakouts from such long periods of sideways action are often powerful and sustained. And that brings us to the most recent price action. Yesterday, on October 1st, we saw a massive green candle, with price surging over 7% and breaking decisively above that consolidation range. This move is a strong technical signal that buyers have taken control, likely fueled by the increasing hype around the ETF decision. To see just how impactful this ETF news can be, let's zoom in on the chart from last year when the initial filing was announced. Here we are, looking at the daily candles around October 15th, 2024. On this exact day, you can see a huge 6% jump, as the price rocketed from around $67 to over $70 on significant volume. This move corresponds directly with the news that Canary Capital had filed its S1 application for a spot Litecoin ETF. This is a perfect example of a news catalyst driving a technical breakout, and it set the stage for the major rally we saw in the months that followed. Now, let's return to the current chart to analyze our key levels. Focusing on the last few months, we can identify our critical zones. The most important support area to watch is between $102 and $106. This zone was tested during the sharp drop on September 22nd and held firm, and the news confirms that traders see $106 as a key line in the sand. A definitive break below this level would be a major bearish signal and would open the door to a retest of the psychological $100 support. If $100 fails, the next major support area isn't until that summer consolidation base around $80 to $85. On the upside, Immediate resistance is yesterday's high at $115.39. A break and hold above this level would signal a continuation of the bullish momentum. The next target for bulls would be the July peak around the $122 mark. Beyond that, the next major resistance cluster lies in the $135 to $141 range, which capped the rallies back in January and February. Now let's switch to a lower time frame to see how the price is behaving after yesterday's big move. On the 1-hour chart, we get a much clearer view of the explosive move from yesterday. Price shot up from the $106 level all the way past $115 in just a few hours. Since that peak, the price has entered a consolidation phase, trading sideways in a tight range. This is healthy price action. The market is essentially taking a breath and adjusting the recent gains before deciding on its next move. We can see that it's building short-term support above the $112 level, which is constructive for the bulls. As long as it holds above this area, the immediate trend remains bullish. Let's zoom in one last time to the 15-minute chart to look at the intraday picture. Here on the 15-minute chart, we can see the tight coiling action of the last several hours. The price is oscillating between roughly $115 and the high of $115.39. This is creating a micro-range for intraday traders. A breakout above $115.40 could trigger the next leg up, while a drop below $115 could see the price pull back to retest lower supports around $114 or even $112. This short-term price action is all about the market waiting for its next signal, which will almost certainly be news-related. Now, let's tie all of this together with some clear scenarios. So, what can we expect from here? The bullish scenario is heavily dependent on positive news or even strong rumors about the ETF approval. If bulls can push the price above the immediate resistance at $115.40, the path is open to test the summer high of $122. A break of $122 would be very significant and would likely lead to a test of the major resistance zone between $135 and $141. Given the current momentum and the scale of the potential catalyst, I'd place the likelihood of a bullish continuation in the short term at around 65%, provided we don't get any outright negative news. The bearish scenario would be triggered by an SEC delay or an outright rejection of the ETF application. Technically, the first major warning sign would be a failure to hold the $106 support level. A break below $106 would likely see a rapid sell-off towards the $100 psychological level. If that level breaks, we could see a full retracement of the recent move, taking us back into the long-term support zone around $85. The risk of this sharp reversal is very real, and I would put its likelihood around 35%, as the market has already priced in a good deal of optimism. To recap, the key levels to watch are support at $106 and $100. Resistance is at $115.40, $122, and then the major zone up at $135. The most important thing to look for is any official announcement or credible leak from the SEC regarding spot crypto ETFs. This will undoubtedly be the primary driver for Litecoin and the broader market for the rest of the month. Also, keep an eye on Bitcoin's price action, as it will heavily influence sentiment across all altcoins. Remember, nothing in this video is financial advice. This analysis is for educational and informational purposes only. Always do your own research and make investment decisions based on your own risk tolerance. Thanks for tuning in to Explain the Charts, and we'll see you in the next one.